Alright, welcome back. Let's do a quick update. So, the stupid shipping freight liner, that big ship, what is it, Evergreen or whatever it was called, it's finally unstuck. But I enjoyed the memes, and I kind of enjoyed last week. Nothing really happened. Besides a hedge fund borrowed money. I'll talk about that in a second. First of all, let's get this out of the way. This is not financial advice. I'm not a licensed financial advisor. I'm not your licensed financial advisor. Consult your licensed financial advisor before you do anything. Stocks, currencies, bonds, extremely risky, extremely volatile. Do not invest anything you're not willing to lose or lose sleep over. No position sizing. Know how to size your trades. Don't leverage up if you don't have like a decade years experience. Don't open a margin account if you are a novice at trading and investing, but they automatically give you a margin account, which is leverage. If your account goes negative, they'll repo your house and everything. Just so you guys know, and consult your licensed financial advisor before you do anything. These are my opinions, and I'm not always right. Can be wrong. Okay, so let's look at the charts. Let's debate inflation, deflation again, since a lot of people are getting on my nerves. And then we'll look at the news. Try to figure out what spring and summer will bring. Alright. I'm just going to shut up the deflationists for once, because I keep having to argue with people on Wall Street. Alright. The orange line is gold. The blue line is the 10-year yield. I look at the 10-year. I don't look at the 5-year, 1 month, because the 10-year is the one to look at. It's what pulls up yields and down. I've already explained how bonds work. Apparently people can't understand it. Their brains don't work anymore. I don't know. The green line up here is the DXY, the dollar index. This is the dollar versus other fiat currencies around the world. It's not the dollar versus gold. It's not the dollar versus oil. It's not the dollar versus home prices, lumber, copper, energy, food, agriculture. It's just the dollar versus other fiat currencies. Okay? In 2020, we saw the dollar spike up here. Gotta look at my screen. You see it spiked. That's when the market took a huge dump because of the coup. What did gold do? Well, it took a dump for like 2 weeks and then rebound and shot up higher as the dollar traded sideways. Hey, guess what? The DXY could go up, and so can gold and silver. Okay? It's done it in the past. It did it right here. Look, in 2019. Dollar went up. What did gold do down here, that orange line? It went up. Oh my God, yeah. It's not always correlated. Because if every central bank's printing all around the world, they're all falling together, the fiat currencies. Maybe the dollar is stronger than the other fiat currencies. It doesn't matter. It's still falling against metals in the long run. Matter of fact, if you look at the last 7 months that gold's been falling since July of last year. So gold hit all-time highs in July of last year. It's been falling ever since. Has the dollar been rallying ever since? No. It's still low. It's fallen. Look at the green line. Now, yeah, as of late, in the past month or two, it's ticked up a little bit. And gold's been falling. That means absolutely nothing. The only reason the dollar went up just a little bit, went back up to, where is it? This is in percentage terms, this chart, so I'm going to look at my other chart. Give me a second. Okay, so it's the DXY is at 93.27. Okay. It broke above the 200-day moving average. It's kind of a big deal, but it does that a lot, and then it's a false breakout, and then it falls back down. And I think that's going to happen. I'll explain to you why. All right. So first of all, before I explain that, what it really seems to look like to me, if you look at this chart, and this is the evidence I have to prove it on this this is daily chart. As soon as the 10-year yield spiked, the interest rate on bonds, gold started selling off. And ever since it's been going up and up, the 10-year yield, gold's been selling off. That makes sense. Because when the bull market in bonds is coming to an end, meaning people aren't buying bonds because people are expecting inflation or losing confidence in the fact that, the payment on the bonds can be made whole, but it's really inflation expectations. So bonds are doing what they're supposed to be doing. As textbook. This is textbook shit that they teach you in college. So when inflation goes up, bonds fall, and then the interest rate, the yield on holding bonds goes up because there's more risk because inflation's running high. So that's what the bond market's supposed to do. But the problem with that is, if interest rates go up on everything, the housing bubble pops. 2.0 housing bubble will pop again. Junk debt for corporations comes due. The debt to service it comes due. If interest rates go up, states, municipalities or whatever, all the debt out there for everything starts coming due, and to service the debt becomes more expensive. So as the yields go up on bonds, it sucks money out of the system, and that is deflationary. Okay? Pensions start defaulting. Everything starts default. Stock market starts correcting. Because all of the stocks, for these companies, the equity markets, they're overvalued. They're priced in for future earnings. What happens to earnings when the debts come due? When people's credit card bills start going up? When people's mortgage bills start going up? They stop spending. And then revenues start falling. And then corporate debt starts coming due. The corporate bond market, the junk debt market starts blowing up. All right, all the CLOs and all the derivatives and all of it starts coming due. So my bet is they're going to do yield curve control. As soon as they do yield curve control, what happens to the yield? They're going to push it down. They're going to push it back down. How do they push it back down? They have to print more money because they have to go into the market and buy more bonds. So again, there's more currency creation and they're pushing the yields down. What is that going to do to metals? It's going to make it go back up. Okay? What's going to happen to the dollar? The dollar historically versus other fiat currencies for, let's say, trade. So the rest of the world supports the U.S. because we don't really make all that much anymore. The dollar is still, historically speaking, is pretty high and pretty strong. So they could let the dollar fall to 80, the 80 handle. So the dollar is gonna, go down. I'll make that green. Okay? This is what I'm expecting for this summer, for this spring. It'll start this spring, start playing out in the summer, especially probably the fourth quarter of this year. Now, on top of all of that, they're going to try to raise taxes. On top of all of that, $4 trillion infrastructure bill spending for the new Green Deal or whatever. On top of that, they're talking about another, I don't know, 2.5 trillion this time or something. I don't know. Another COVID bill for more stimmy checks, which is probably never going to end. It's turning into UBI at this point. And they can't take it away. Once they give it to the plebs, they can't take it away because people are going to become reliant on it, dependent on it, and then they're going to throw a tantrum if they take it away. Plus, there are no jobs. There's no new jobs being created. Again, banks are not lending. So if you want to take out a loan to build a small business, they won't give it to you. But they will give $4 billion to some hedge fund that wants to leverage it up 500x to go gambling on the markets. Because everyone's forced to chase a yield. Because you can't find yield anywhere. Okay? Except there is one place. But I don't want to talk about... That's for the private group. Alright, so... And I'm talking about high yield. And this is it. End of argument. Milkshake theory thing, done. Over. I think that played out in 2018 and 19. This is it. They can't let yields go up. Another reason why they won't let yields keep going higher is because it'll dump the market and then it'll actually cost, or it will take more fiat currency to reinflate everything. It'll be double, triple, quadruple. It takes quadruple amount of QE money printing to reinflate it. So they freak out every time the market even drops 5%. Because they don't want it to accelerate and have a serious correction. Because then it takes even more to get it back to where it was and then go higher. So I think what they're doing is, and believe me, call me a tinfoil hat, whatever. I guarantee you they're doing all kinds of stuff behind the scenes. Like I said, they've never been audited. So they're just going to keep the music playing as long as they can, like Venezuela style. The market's going to keep going higher and higher as I don't know, the real economy gets weaker and weaker. Although there's going to be some points where it gets a sugar high, or where, it does get a little juice to it. I think this summer it's going to seem like the economy's recovering. There's a huge boom. It might even last into next year or something. But it will come at a cost, which will be higher inflation and more stimulus. This infrastructure spending bill, yeah, it's going to boost the economy temporarily, maybe for a year or two, and it'll keep everything going. It'll keep everything going for a little bit longer, I think. It's when that wears off is when things are going to get really bad, and when it doesn't really work out, it might not even work out. Uh, but they'll do things like they'll go nuclear, literally nuclear, like more nuclear power plants, which I have awesome nuclear mining stocks. One of them I picked is up 300%, and we got in. And I have a couple more coming out. I'm looking at right now. So that's exciting. But I mean, this is it, guys. It's all about rates. It's all about the bond market. The bond market is like, I'm not sure, but it's at least 5 times larger, if not 10 times larger than the equities markets. I'm not sure. And people keep saying, where's the inflation? Where's the inflation? I just went shopping again. Well, everyone goes shopping, but I shop like every 3 weeks or once a month. I try to just load up, and because I hate going shopping. Um, so I bought like, I don't know, maybe 2 weeks worth of food for just myself and the pooch, the dog. I literally spent 250 just on myself. The dog, like $60 for a huge bag of dog food. So what? I spent $300, and that'll last us 3 weeks. 3 weeks. So just for me, $250 food for like what? I can stretch it 3 weeks. Most of it's gone in two. That's that's inflation. Um, Obviously lumber and all kinds of other things. But they're like, yeah, but we don't like people are like have this imagination of Weimar Germany or like Venezuela. It doesn't happen like instantly. It slowly creeps in and then it increases slowly. Gas prices, that's inflation. Gas prices has that's why the price of oil is going up. It's nothing else. And they're going to start making excuses. The speculators on oil, like shut up. It's not. They always say that. They come out with excuses. The inflation's in Tesla. It's in Apple. It's in all these stocks. It's in the ARK fund. It's in SPACs, NFTs. It's in crypto. Some of it, a little bit of it went into metals in 2020. The most undervalued sector is the mining stocks, literally. And we're about to have a commodity super cycle. And we are going to have it. Why? Because they're about to do 4 trill on infrastructure spending. Where do you think they're going to get all the metals and the minerals to do that? And they're going to do EV build out, smart cities. Going green really means we're going to do more mining and spend more oil to do the infrastructure to go green, which is endless solar panels and windmills chopping up birds and. So it's still early. Listen, the inflation. First, the inflation went into the housing market and real estate. Then it went into VC funding to fund a bunch of apps and what's that company that rented out like homes and rooms? I can't, for some reason I can't remember. It'll come to me. So all the inflation went to startups, VC funding, Silicon Valley, corporate buybacks. The inflation went into all of this. Corporate junk bonds. Went into the bond market. Went into all equities. Then it went to what? It's gone into crazier crap. There was a ton of ICOs for the past few years. A ton of it went into crypto. Crypto's like almost 2 trillion market cap. It's a lot there. I'm not saying 2 trillion went there, but at least a quarter of it, right? It's a lot. Half a trillion, let's say. NFTs now. It's rampant. It's rampant. That's where the inflation is now. Where is it going to end up? Well, someday the market is going to correct. And boomers are going to panic. They're going to pull their retirements out. And then they're going to start seeing prices rise even more. Because now there's more currency chasing less goods. Why is there less goods? Because we're not really manufacturing anything. We're not building more. Less entrepreneurship. Less small businesses. Especially with this COOF crap. Well, we'll just buy from China. No, their prices are going to go up as well. Because inflation's already starting to go into commodities. The next stop on the inflation train is commodities. Commodities go up. The cost of things go up. People buy less things because they can't afford it. That's inflation. The cost of transportation, which is really the cost of oil. Gasoline, diesel, it's oil. That's inflation. All right. If this doesn't get through your head now, then go all in cash. I really don't care. I'm not here to save everyone. I'm just here to save the people. Or try to. I can't save anyone. You have to save yourself. But that's what I'm doing. I'm saving myself. But if this doesn't make sense to you, that's fine. You go do you. You do whatever you think is correct. Just stop arguing with me. I really don't care what you think. Okay? I'm doing great. I'm doing really great. Okay? Now, I've been scaling in for the past month in mining stocks and metals. That's fine. I'm scaling in. I never go all in. I never go all out. I just do it in tranches. I take steps in. I also have extra cash always on the side because I own 2 businesses and when it's coming in, and I live like a poor person, basically. I don't spend money on anything besides groceries, which are getting more expensive. So I always deploy it and I scale in to mining sector. Uranium stocks as well now. Copper, poly-precious mining stocks, royalties. Royalty generators. I'm going to come out with that spreadsheet. Those are super risky. But those are the last things you look at. Because they will be the last things to rally. That's my strategy. I could be completely wrong. Maybe, I don't know. maybe I'm completely wrong, and the dollar is going to go to the, to over 100, and gold's going to go $1,300, and silver is going to go to $6, even though there's shortages on the physical side, and it's hard to get, and the Perth Mint is like not, whatever. You do you, and I'm done. No more debate. It's over. You're either in my camp or you're in the other camp. We'll see what happens. Even though I predicted the last few rallies, I literally came out in 2018. I said, this is it. This is the beginning. If you got in then, you're really looking good. You're awesome. Everything's great. The later you get in, the more nervous you get on these pullbacks and corrections in gold, silver, and the mining sector. But I really believe if they do this infrastructure, if they do more stimulus, they do more QE, do yield curve control, and more stimmies, I really believe metals are going to rebound, and then it's just going to take off like a rocket, and you're not going to see any pullbacks or corrections. A lot of people are going to get left behind. All right? That's what I believe. And then there's a lot of people who are like, oh, but the manipulation, it doesn't matter. It's all about the physical. It's all about the supply side. It's all about the supply side. Okay? Let's look at what else? Let's look at the dollar, DXY on its own. Yeah, broke clearly above the 200-day moving average. This could be a false breakout, and it'll fall right back down. And I think it will, because yields keep rising, and as soon as Powell throws in the towel, there's no way this economy could handle 2% interest rate. The housing market's going to just pop. So, yeah, as soon as he throws in the towel, the dollar's going to break back down, fall below that 200-day moving average. And when I say historically speaking, here's the DXY if you zoom out. Here's 2009, all the way back here. See that? It was down at 74 handle, somewhere down here. It's down at 74. From like 2009 all the way to 2011. It was all the way down around this. It even hit 72.6. We're at 93.2. We're already high. Yeah, we've come down from the all-time high of the recent all-time high of 103 on the DXY. So, let's say if this isn't a false breakout on the 200-day moving average, then it's definitely not going to get above the 200-week moving average, which is 94.6. We're not that far off from that. We could be there in 2-3 weeks. But I'm telling you, if the DXY, the dollar gets up to the 94 handle, that means the 10-year yield is at 2%. And that also means shit's blowing up. Okay? My opinion. Consult your licensed financial advisor. That's what I'm thinking. So, and then we're going to get yield curve control. And then it'll drop like an anchor, like something like this. I don't know. I'm not a prophet. All I know is pretty soon, I think within the next max, like 4 weeks, one more month. And they're gonna, like, metals are gonna rebound, make new all-time highs. Not within a month. I'm saying within a month, the trend's gonna change. If we didn't just bottom today, we might have bottomed today because metals got smashed again. DXY broke out. This can't go for long because the 10-year yield it's up there. What was it? Give me a second. Oh, come on. It's at like 1.75. So or no, yeah, the 10-year yield is at like 1.75%. 25 off from 2%. Trust me, the market's going to freak out once yields hit 2%. That could mean that a 4-decade bull market in bonds is over. Now, Wall Street hasn't figured out that the Fed is stuck. They haven't figured that out yet. Because they would be anticipating that by buying mining stocks and I mean, some smart firms are doing it, but not the majority. They'd be buying gold and silver and mining stocks if they understood what's really happening here. If they understood that the Fed could never let yields run much higher. Because if they do, party's over, man. And they can't even reinflate it. So the Fed's going to pretend like it's going to fight inflation, but it will never actually really do it. So they're not going to raise rates. If anything, they're going to do yield curve control. And in the last hearing or whatever, he said that. He literally told you that he's going to do that. So, I don't know. I just think that the institutions take advantage of every time the DXY ticks up and the rates tick up, and then they just smash metals. That's all that's really happening, because central banks right now are hand over fist still accumulating physical metals. So why would I ignore that? Okay. Let's take a look at gold. I'm going to look at corn, the Bitcoin, real quick. All right, we hit the 100-week moving average on gold. This would be a nice support area. Dumped to 1685. And they dump it 8 in the morning, right as the COMEX opens. Let's take a look at the daily. Still a nice bull flag. I just keep extending it. And I've been through this many times. Back here as well, remember? If you've been listening to me for a while. This is still a nice bull flag. See the flag? It's like an RC car flag now. And then it's going to break out. And when it does, and it tests its recent all-time highs of June or July of 2020, if we zoom out here, I mean, this is a perfect setup, in my opinion. I mean, it's still a giant cup and handle then. It's a giant cup and handle. Here's the cup. It's easy to see. And then this was a pretty decent correction in gold. And then it's going to rebound this spring and summer. And we're going to make the handle. And this will be a giant cup and handle from the previous bull market from 2008. Well, technically it broke out in 2001, but it's a giant cup and handle basically from 2011 to the present. This year it's going to make gold's going to go back up to new all-time highs and probably break out and make new all-time highs. So that's a decade-long cup and handle. So the upside move on that could easily push gold to like $3,000 in my opinion. I can measure it out and everything. I'm just not going to do that now because this is a while away. Well, let's enjoy the rally this summer, and then after that I'm going to start measuring how high can this really go. Technically it could go to who knows. Jim Rickard says it could go to 50,000 if you actually do all the math. Okay. Sure, why not? I mean, it all depends on how devalued the dollar gets. And it will. It will. You'll see. Just have patience. And I don't want gold to go to like 8,000 in like 1 year, because that means like society is really falling apart really fast. Nobody's really ready for that yet. Like, to be ready for that, you really need like some good farmland and and like a moat. All right, so let's look at silver. I don't really talk about silver all that much because it's so heavily manipulated. Like, TA is hard on it. But you know what? It's holding up. By the way, all the oscillators on the weekly charts for gold and silver are oversold. Come on. My chart froze. Or no, it didn't. Alright, so silver looks weird. This doesn't look right. It's because they keep smashing it. But it doesn't matter. I have a green Ishimoku cloud, which should act like a ramp for a nice rebound. And it's holding up. It's not really falling. It's not falling below 20 bucks. It's not even falling below. I mean, I think there's decent support at 23 bucks, and it's really not going to fall below that. And again, this is the paper markets. Go try to buy a silver round physical. I don't know, it's probably like 35, 40, or you could probably get it for like 30 bucks or 32, something like that. So the premium on it is like, it's a lot. It's like $7, $8 over the paper price, if not more. I haven't bought any. Maybe I should now. If you want to easily buy silver, but not actually get it physically, you can look at the Sprott PSLV ETF. It's physically backed, so when you go and buy it, and you could get it redeemed if you want. But that's a way to get physical exposure without actually having it at your home, because that's kind of risky. You don't want people breaking in, this and that. And I do a lot of that as well. Personally, consult your licensed financial advisor, read the prospectus. All right, so yeah, I'm telling you, it doesn't matter. It's going to rebound and make new all-time highs. As soon as it breaks above 30, I don't think they can stop it. It'll go to 50, in my opinion, real quick. Because then, and not just that, the U.S. Mint's going to shut down for 2 months this spring and summer. I forgot the dates. So it's going to cause bottlenecks. All right, let's take a look at some other things real quick. Let's look at oil. This will load. Here's oil. WTI crude, weekly chart. So a retest of the 200-week moving average and my blue equilibrium line would be perfectly normal. So maybe a little more downside, back down towards 55 bucks, 56, something like that. And I think it's just going to go higher after that. And we're going to probably see like a decade-long bull market in oil, especially as they're very anti-oil. So I feel like a lot of the weaker companies, well, they're going to go out that are U.S. domestically based. The ones that do survive are going to do very well. But internationally, I think oil is going to do great because the new Silk Road, China, and Russia, they don't care. And neither does the rest of the emerging markets in the second world. They need oil. They need gas. They're not going green. So, and I'm going to look at an ETF for emerging market stocks because honestly, it's not my expertise to go into that. But I do think I know others who do have the expertise and I'll give that to the private group because I don't want to miss out on emerging markets because I do think emerging markets are going to they're going to outperform the U.S. Equities and Europe and the Silk Road. If that thing really does work well, they're going to do good. They're already kind of they're rebounding very well. Let's look at agriculture. So everything's pulling back in the commodity sector a little bit. So it's really a buying opportunity. And then possibly a good hold for a very long time. You know what? Let's look at uranium. All right, here's Uranium Futures. I mean, it hasn't even since 2006. It's still in a bear market. It hasn't even broken out. I mean, it did break back. This was the all-time low. But it looks like, look at it, it's already rebounding, and it broke out above my blue equilibrium line on this multi-year chart. This is a weekly chart. And once something does that from a multi-year bear market, it's done. We're going into not just a cyclical, but a secular bull market. And metals, gold, silver, are in the beginning phases of another secular bull market. All commodities, in my opinion, consult your licensed financial advisor, are about to go into a secular bull market. It can last 3, 5, 10 years, something like that. I don't know. We'll see. Palladium was the first one to move, if you guys remember that. Platinum. I have some platinum ETFs. Let's take a look at platinum. And then there's a bunch of other metals, rhodium and all kinds that are going to do very well. So a lot of the mining stocks I've been looking at, the ones, they mine everything, and those are going to do, polyprecious mines, those are going to do very well. They've already done very well, but they're going to do even better. Yeah, I mean, platinum broke out. It's broke above my blue equilibrium line. It's pulling back a little bit. This is buy the dip opportunity, in my opinion. Its March low would have been great. It was like at $562 an ounce. But its low, bear market lows were around $800, $760 to $800. Right now it's at $1,150. So it's broken out. Its previous all-time high was $2,300 an ounce. Now think about this. Gold made an all-time high in July of 2020. Platinum hasn't. It's still coming out of a bear market. So for platinum just to get back to its previous all-time high, it's got to do a 100% move, a 1x. And then after that, it's going to do another like all-time high, which could be another 100x or something, right? So finding some needles in a haystack, some kind of miner that mines platinum, or maybe mines silver, gold, platinum, and a few other metals, would be a nice, that'd be a good good investment in a commodity super cycle secular bull market, right? Theoretically speaking. All right. Let's look at Bitcoin. So Bitcoin, here's Ethereum on the right. Should I try to do TA on this? I really don't care. It doesn't matter. For me, it doesn't. So the other crypto, I only hold one crypto now. And in the past month, in the past 4 weeks, it went up over 200%. It outperformed everything out there in the past month. While all the shit coins, pumped and then dumped as usual, because they don't really have a purpose. My crypto, 200%. From its beginning and its all-time low, it's up over 350x. So let's say when I said you're never going to get the perfect bottom. So let's say you got in when I was telling you to. You're up around 3,000%. Or is that 30x? It's crazy when you're talking about such large numbers in gains, because nobody ever talks about 300x. All right. So 10x is 1,000% gain. Oh man, that's a lot. What's a 30,000% gain? I don't know. You do the math. You figure it. It's a lot. It's like life changing. That's all that matters. All you have to do is throw some pocket change at it, and you're like set. So I really do hope cryptos just keep going higher. Will they? I don't know. I really don't. I'm assuming they should. They probably, because the stock market keeps going higher. Now, I don't think the NASDAQ, maybe the NASDAQ will make another all-time high. Even if it doesn't, it doesn't matter. The S&P and the Dow Jones are just going to keep ripping because of this infrastructure build-out. I think the Nasdaq, I don't know, it might trade sideways, it might go into a bear market, it might trade, it might, have a very long correction or pullback and then start going back up as they keep doing more stimulus and QE. I don't know. So we'll see. Crypto, can it go higher? I guess. I really don't know, guys. I do know that there's talks about an ETF coming out, and although a lot of regulation, that they might crack down on it some more. They're gonna try to, but you do see adoption, I guess. I really don't know. There's 1,000 crypto TA channels. I really don't know what to tell you guys. All right, let's try to do TA on it. MACD still needs to cross to the downside. RSI though, it's oversold on the weekly. Let's take a look at a monthly. It's on 2 count. Oscillators are overextended to the upside, but technically on the monthly they could just keep running hot for a while. Let's look at the, well, here's the 31 day. Yeah, that's the same thing. Daily kind of looks bullish to me, the daily. So there you go. Let's talk about the news a little bit. So that hedge fund, it's just leveraged. So this is like dark, like this is behind the scenes, like derivatives investing that doesn't go on the books of like banks and like hedge funds, and it makes them look better than they really are. So they just go to a bank, borrow billions, and they just give it to them because they don't know what to do with the money. God forbid they lend it out to the plebs, so they can maybe go out and build businesses and rebuild the economy. God forbid they do that, but they'll give it to people who can't afford homes. So I don't know. While significant, with the bank expected as much as a $10 billion in total losses concentrated at Credit Suisse, these losses will not be game-changing. $10 billion. It's a lot. What else? Forget the losses. Here are the real reasons traders are spooked about the Archegos implosion. This is sparking concerns about reduced leverage, increased regulation. Yeah, so everyone's probably doing it. Is there some kind of domino effect, like some kind of systemic risk? Lehman moment? No, I don't know. Probably not. I doubt it. Something to watch, but I doubt it. But the problem is, if they come out with more regulations over this, then that's gonna... I have a feeling a lot of people are doing this on Wall Street and everywhere, because it's hard to find yield. A lot of these stocks are really overvalued, and the larger the market cap gets, the more stocks are issued, the more expensive stocks are, the harder it is for the stock to move higher, because it takes more liquidity to do so. Okay. Oh, by the way, whenever they say liquidity, that liquidity is like a fancy word for inflation, in my opinion. What is this? All right, so this huge tax hike, the biggest since like the 90s or something, coming out. Very bad timing, in my opinion. So the corporate tax increase will go from 21% to 28%. Now, a lot of people are like, hell yeah, tax the corporations. I sympathize with that, and I agree. But there are ramifications for that are bad for the economy. The first is, well, they will just move their headquarters to other countries and the plants and everything. The second problem with that is, well, I guess it's negative for the markets. It's very negative for the equity markets because this will cut into their profits, if any of these companies even have profits. The ones that do, they'll cut into that for sure. A third issue is I feel like they have ways around it, and it's really just for show. I don't know. But they probably will pay more. Okay, so they want to tax global subsidiaries worth 550 billion over. That's kind of negative for capital inflows from the rest of the world to the US. So that could cause capital outflows, which is not good for business, not good for capital markets, equities. So this is what's really bad. Taxing capital gains for the wealthy as ordinary income, as opposed to current rate of 20% for those making 441,000 or more per year. Now, a lot of you think 441,000 per year is a lot of money. It's really not. That's just like kind of upper middle class. This is capital gains, though. That's going to really hit the markets really hard. So you might see a lot of people taking profits this year. They might hold on maybe till late summer or Q4. Depends on when this gets passed and rolled out. But that's definitely going to drop the equities markets. So what is it? So they're going to tax unrealized capital gains at death, 370 billion. How do you do that for unrealized? You can't. If it's not realized, you never took the profit. So how do you? There's no way that's going to pass because nothing will work. Everything breaks. I don't know. These people are insane. Return to the top individual rate for people earning over 400,000 per year to the rate of 39.6%. So is that combined couple? So it's really just 200,000 per person. So any of you guys who, plan on ever making a decent amount of money through stocks or cryptos, like you're gonna get hit pretty much with 40%. 40%. So if you made a milli, you really only made 600,000. That sucks. That's bad. Yeah, so people are going to leave. That's what's going to happen. They're just going to leave. Go move to islands, go move to other countries. That's pretty much what that'll do. So capital flight out. That's what happens. That's what always happens. Also, for the middle class or what's left of it, and even the poor, the Trump did cut your taxes. Basically, every paycheck, you were getting more money. But now that's expiring, and he's just going to let it expire. So everyone's going to pay more during the biggest depression ever. And it is. It's just no one's admitting it. And a lot of people are feeling it. Real brilliant. It doesn't matter. I don't think... We'll see if what passes, what not. The only reason they're doing that is so it gives more credibility to all the trillions they're about to print, and even more coming after that. Yeah, so I'm telling you, if anything, I feel like they're going to take it. They're going to take this country, and U.S. is acting tough, like they have their back. It is their interest, but if they do something, if they go in there, which it looks like they're really getting ready to do that at any given moment, metals are going to explode. Explode. It's a big country. So you got to read that. I don't really want to talk about it. U.S. consumer confidence explodes higher in March. Yeah, I bet. I mean, people are out and about spending their stimmy, and everyone thinks it's returned to normal, which it kind of will be, and there will be sort of an economic boom, but still commodities are going to go up, and so is inflation. And I guess they're never going to let the stock market correct more than like 5-10% because they're so scared to death of it. So I don't know, guys. I guess it's just up and away. U.S. home prices are soaring at the fastest pace in 7 years. Now, they are because, for one, it costs 25% more right now to build a home. And they build them like shit on top of that. And I still feel like some people are just moving away from the urban centers. This is the fastest year-over-year rise since March 2014. Away from the 20 major cities, prices are rising even faster, up 11%. The fastest year-over-year price appreciation since February 2006. Now, you know what I'm wondering? Like, when is this trend going to stop? Because at some point, a lot of people lost their jobs. So where are they getting, how are they getting approved for home loans? And how are they going to pay these mortgages? And I'm telling you, if the yield rises, there's a delay from the yields rising. If the 10-year gets to 2%, it's got to put in a top to this housing boom temporarily for a little bit until yield curve control, right? And there you go. Another reason why I don't think unemployment... So maybe they juice the numbers, and the spring and summer unemployment numbers are going to look better. But in the long run, we're becoming obsolete. Even office jobs, algorithms, you know. But, yeah. And I started talking about this like 4 years ago. And people are like, it's a decade away. No, not really. It's already here. Amazon, you know, there's a lot of like union strikes at Amazon. Well, they're already talking about driverless delivery vehicles, robots literally being able to walk up to your front door and deliver. There's already robots in the warehouses that do all the moving around of the packages on pallets and loading them on the shelves. And then they're going to have these as well, which just kind of pick them up and drive around and pretty much could do whatever humans do. You won't need a human in a forklift or anything. So, yeah. You just need a few of them there to monitor everything and to fix if any machines break down or there's some sort of supply chain, some sort of blockage somewhere or something. You know what I'm saying. All right, so yeah, everything looks great for the summer and spring. People need to relax and chill out. Metals, when they rebound, it'll happen very quickly. It'll probably happen so fast that it leaves most people behind who keep looking for that perfect bottom to buy, because you'll never get it. That's why I scale in and scale out. All right. Although I'm not gonna lie, I did go all out on my leveraged ETFs and a lot of mining stocks at the all-time high in July of 2020. So I got I nailed that one. But it's always harder to buy the bottom. So what you do is you start small and then you scale in, right? So let's say you have 10 grand to buy the dip. Well, you start off with $500, and then you start investing, and then you start doing tranches of $1,000. Now there are different situations where there's some mining stocks that are not dipping, that look better on the charts, that have major support and maybe a news event. So there you would actually buy the dip sooner. So these traders who live on the daily time frame, they talk a lot of shit, but I'm the one who's buying these mining stocks that are hitting their support levels, and their earnings that just came out recently were spectacular. They were better than anything else out there on the equities markets. But no one's paying attention to that. And believe me, nobody on Wall Street en masse is paying attention to gold, silver, copper, palladium, platinum, uranium mining stocks. They're late to the game. They just buy the ETFs. But eventually they start moving into the juniors and everything below. And then the royalties. There's brand new royalty streamers. Brand new. Like, came out like this month or last month. There's a lot of opportunities. And pretty soon I need to start getting my list of email alerts for all these mining stocks, and then I'll start pumping them out in the private group newsroom. There's a newsroom for private group members. So yeah. You guys got stimmies, right? Join the private group. $220 fee for the start, and then you get a download for Basics 101 to trading and indicators. My indicators are in there too. If you want to use my indicators, which are pretty damn good, probably the best. And then you get everything else. We talk about mining stocks. Then it's $20 a month. Alright guys, smash some likes, share my videos. It's the only way my channel grows, and I'll continue to. If my channel grows, I make more videos. If it doesn't grow, I make less videos. That's just how it is. Alright, so share my videos and join my free newsroom. I have a free newsroom where I upload all kinds of crazy stuff that you guys enjoy. The link's below. You just got to download the app. If you're too lazy to do that, you'll never be rich. I promise you. And all the other links, check them out. Find me on other platforms. I'll see you guys later.